Assalamualaikum and very good morning, everyone. So, today we will be presenting our project entitled Analysis of Corporate Financial Performance, a Trend and Comparative Study of CelcomDigi and Maxis. My group members are me, Nur Shakira binti Misni, Hazwani binti Muhammad Khairi, Karina Izzati binti Ismail, Nurul Izzah binti Jamil, Nur Fatihah binti Sobri. So, the objective of this presentation is to compare the financial performance of two major telecommunication companies in Malaysia, namely CelcomDigi and Maxis, by analyzing their financial trends and performance indicators. So, firstly, let me introduce you CelcomDigi Berhad. CelcomDigi is currently Malaysia's largest mobile network operator and telecommunication company. The company was officially established on 30th November 2022 following the merger between Celcom Axiata Berhad and Digi.com Berhad. Its headquarters are located in Petaling Jaya, Selangor, and the company serves more than 20 million customers nationwide. CelcomDigi is also listed in Bursa Malaysia under the stock code CDB. The merger allowed the company to combine resources, strengthen its network infrastructure, and become one of the leading digital connectivity providers in Malaysia. So next, we will discuss the core activities of CelcomDigi. The company offers a wide range of telecommunications and digital services, including mobile telecommunication services such as prepaid and postpaid plans, 5G and broadband services, fiber internet services, international roaming and digital services, enterprise and business digital solutions, Internet of Things or IoT solutions, and cloud and cybersecurity services. So these diversified services enable CelcomDigi to serve both individual consumer and business customers while supporting Malaysia digital transformations. So moving on to the CelcomDigi vision and mission. The company's vision is to become the nation's most trusted brand and inspire society through digital innovation. Meanwhile, its mission is to deliver inclusive and sustainable digital connectivity for all Malaysians. So this shows that the CelcomDigi focuses not only on profitability but also on providing accessible digital services and contributing to the country's digital development. Next, let us look at the background of Maxis Berhad. Maxis is one of the Malaysia leading integrated telecommunications provider. The company commenced operation in 1995 and is headquarters at Menara Maxis in Kuala Lumpur. Maxis is listed on Bursa Malaysia under the stock code 6012 and serve millions of customers across Malaysia through its mobile, broadband and enterprise services. Over the years, Maxis has established a strong reputation for providing reliable network services and innovative digital solutions to both consumer and businesses.
Next, I will explain the core activity of Maxis. Maxis provide fixed line and fiber broadband service for fast and reliable internet. It also offer home internet solution for household. For business, Maxis provide enterprise connectivity, managed service, cloud, and cybersecurity solution. Besides that, Maxis offer IP and digital business solution to support digital transformation. Maxi also provide international gateway service for global communication. Last, Maxis offer mobile telecommunication service through Maxis Postpaid and Hotlink. So, overall, Maxis focus on provide reliable connectivity and digital solution for both individual and next, I will explain the vision and mission of Maxis. The vision of Maxis is to be the leading integrated telecommunication company in Malaysia. The mission of Maxi is to connect people and business through digital innovation and reliable connectivity so they can enjoy better communication and more opportunities. In short, Maxi aim to become the top telecom company while providing reliable digital services to everyone. This table shows a comparison between CelcomDigi and Maxis. CelcomDigi was established in 2022 after the merger of Celcom and Digi, while Maxis was established in 1995. The headquarters are located in Petaling Jaya for CelcomDigi and Kuala Lumpur for Maxis. Both companies operate in the telecommunication industry and provide similar services such as mobile, fiber, and enterprise solutions. So, both companies are listed on Bursa Malaysia. Overall, both CelcomDigi and Maxis are among the leading telecommunication company in Malaysia. Okay, next, financial ratio analysis for CelcomDigi and Maxis. We use four main financial ratio to evaluate the company performance. Okay, first, liquidity ratio. Include the current ratio and quick ratio to measure the company ability to pay short-term liability. Okay, second, leverage ratio. Include the debt ratio and time interest earned to assess the company debt level and ability to pay interest. Okay, third, operating ratio, which consists of the average collecting period and inventory turnover. Okay, last, profitability ratio. Include return on asset, return on equity, and net profit margin to measure how effectively the company generate profit. Okay, first we will look at the current ratio, which is measure a company ability to pay its short-term liability using its current asset. Okay, for Maxis, the current ratio changed from 0.48 in 2021 to 0.63 in 2022 and then decreased to 0.48 in 2025. For CelcomDigi, the ratio stayed at 0.49 in 2021 and 2022, dropped to 0.46 in 2023, and then increased to 0.57 in 2025. So overall, both companies had a current ratio below 1, which means their current liability were higher than their current asset.
Hi, my name is Karina Izzati and my matrix number is 2025 8426 and 38. And the next one is number 2 quick ratio. Based on the calculated ratio above, Maxis Berhad showed a fluctuating trend in its quick ratio from 2021 to 2025. This is because the trend is contributed by the significant changes in the company's inventory, which increased from 5 million in 2021 to 22 million in 2025 before decreasing back to the 19 million in 2025. CelcomDigi Berhad shows its fluctuating trend in its quick ratio from 2021 to 2025. The ratio increased from 0.45 times in 2021 to 0.47 times in 2022 before decreasing in 0.45 times in 2023. It then increased to 0.54 times in 2025. This trend was influenced by changes in inventory, current assets, and current liabilities. Inventory increased from 116,568 in 2021 to 246,653 in 2023 before decreasing to 197,947 in 2025. The next one is leverage ratio, number 1 debt ratio. Maxis Berhad shows a fluctuating trend in its debt ratio due to changes in total liabilities, which increased from 15.7 billion in 2021 to 17 billion in 2023 but decreased to 16 billion in 2025. CelcomDigi Berhad showed a fluctuating trend in its debt ratio from 2021 to 2025. The ratio decreased from 91.93% in 2021 to 54.82% in 2023 before increasing slightly to 56.67 in 2025. This was due to changes in total assets and total liabilities. Total assets increased from 17 million in 2021 to 36 million in 2025, while total liabilities increased from 7 million to 20 million during the same period. Based on the table, Maxis Berhad experienced a fluctuating trend in its time interest earned from the year 2021 to 2025. This is because of the significant changes in EBIT from 2021 to 2023, which fell from 2.17 million to 1.8 million respectively. Then it recovered strongly to 2.5 million in 2025. CelcomDigi Berhad showed a fluctuating trend in its tie ratio from 2021 to 2025. The ratio decreased from 7.04 times in 2021 to 3.82 times in 2024 before increasing to 4.5 times in 2025. This was due to changes in EBIT and finance costs. EBIT decreased from 1.7 million in 2021 to 1.4 million in 2022 before increasing to 2.7 million in 2023. EBIT then decreased to 2.3 million in 2024 before increasing to 2.6 million in 2025. Based on the table above, Maxis Berhad experienced an increasing trend in its average collection period from the year 2021 to 2025. This is because of the significant changes in revenue from 2021 to 2023, where it went up from 9.2 million to 10.1 million respectively. Then it continued to increase to 10.5 million and 10.6 million in the following years. CelcomDigi Berhad showed a fluctuating trend in its average collection period from 2021 to 2025. The collection period increased from 61 days in 2021 to 131 days in 2022 before decreasing to 71 days in 2023. It then increased to 85 days in 2025. This was due to changes in trade receivable and revenue. Revenue increased from 6.3 million in 2021 to 12.9 million in 2025. Based on the table above, Maxis Berhad experienced a fluctuating trend in its inventory turnover from the year 2021 to 2025. This is because of the significant changes in cost of goods sold from 2021 to 2024, where it went up from 3.4 million to 4.1 million respectively. Then it dropped slightly to 4.1 million in 2025. CelcomDigi Berhad showed a fluctuating trend in its inventory turnover ratio from 2021 to 2025. The ratio decreased from 15.04 times in 2021 to 10.64 times in 2022 before increasing to 17.84 times in 2025. This trend was influenced by changes in inventory and cost of goods sold. COGS increased from 1.7 million in 2021 to 3.5 million in 2025.
Hi, my name is Nurul Izzah binti Jami'an. My number ID is 20254 29702. I will presenting for profitability ratio. First, return on asset. Maxis Berhad has a fluctuating trend for its return on asset. This is because the return on asset fluctuated from 2021 until 2025. This trend is contributed by the changes in the company total asset. For CelcomDigi Berhad, it showed a fluctuating trend from its ROA from 2021 to 2025. The ratio decreased from 14.82% in 2021 and 2.03% in 2022 before increasing to 4.15% in 2025. This was due to the changes in net profit and total asset. The total asset increased from the 7 million in 2021 and 36 million in 2025 following the merger. Second, return on equity. Maxis Berhad has a fluctuating trend for its return on equity. This is because the return on equity showed decreasing from 2021 to 2023. This trend is contributed by the decreasing in the company's stakeholder equity. For the Celcom Digi Berhad showed a fluctuating trend in its return on equity from 2021 to 2025. The ratio decreased significantly from 183% in 2021 and 4.68% in 2022. This trend was influenced by the changes in both net profit and shareholders' equity. Third, for net profit margin, Maxis Berhad has a fluctuating trend for its net profit margin. This is because the net profit margin showed decreasing from 2021 until 2023. This trend is contributed by the increase in the company's sales. For the CelcomDigi Berhad, showed a fluctuating trend in its net profit margin from 2021 to 2025. The ratio decreased from 18% in 2021 to 11% in 2022 before increasing to 12% in 2023. This trend was influenced by the changes in both net profit and sales revenue. Sales revenue increased from 9 million in 2021 to 12 million in 2023 before increasing further in 2025.
Moving on to our liquidity ratio comparison, let's look at how CelcomDigi and Maxis handle their short-term obligation. First, looking at the current ratio, CelcomDigi leads at 0.57 compared to Maxis at 0.48. This means CelcomDigi has a better structural safety buffer to cover immediate debts. Next, if we look at the quick ratio, which removes slow-moving inventory to show instant liquidity, CelcomDigi remains strong at 0.54 while Maxi stays at 0.48. Notice how close CelcomDigi's quick ratio is to its current ratio. This tells us they have a highly liquid capital structure with very low dependency on inventory to meet cash needs. So to wrap up this slide, CelcomDigi consistently outpaced Maxis in liquidity performance during the later years of the analysis. Structurally, CelcomDigi is a much better, more agile position to manage its short-term liabilities and lower its financial risk. Let's analyze the activity ratio comparison to see how quickly these companies move their assets and collect cash. Here, we see a distinct division in operational strategies. Maxis shows highly optimal stock control, recording a massive inventory turnover of 217.37 compared to CelcomDigi only for 17.84. This massive lead indicates that Maxis keep minimal capital lockup up in unsold retail assets. However, CelcomDigi counterattacks on the credit side. They maintain a significantly faster collection period cycle, meaning they excel at converting customer credit invoices back into operational cash quickly. In conclusion, each player demonstrates a clear segment focus. Maxis dominate physical capital speed, while CelcomDigi aggressively manage credit cycle to maximize liquid cash flow. Now let's look at financial risk and capital structure under the leverage ratio comparison. This is where CelcomDigi showcase its strongest architectural advantage through dramatic balance sheet cleanup. CelcomDigi aggressively deleveraged its capital profile, lowering its debt ratio from a critical 91.93% back in 2021 down to a healthy 56.67% in 2025, drastically minimizing systematic default risk. On the other hand, Maxis has opted for a highly leveraged structure, holding its debt ratio above 70%, while a higher debt ratio elevates balance sheet exposure. Maxis managed this risk exceptionally well. They secured their structure with a stronger time interest in ratio of 5.32 compared to CelcomDigi 4.55, giving Maxis an optimal interest coverage buffer funded by its powerful operating profits. Next, we move on to the profitability ratio comparison. So when we look at the profitability ratio comparison, Maxis Berhad demonstrate absolute dominance over CelcomDigi. Looking at return on asset, Maxis achieved a 6.93% compared to CelcomDigi's 4.15%, indicating highly effective capital deployment relative to their asset base. This gap widened aggressively when we look at the return on equity, where Maxis deliver a stellar 25.39% return, multiplying shareholder value for more demically than CelcomDigi 9.58%. Finally, Maxis maintains a comfortable net profit margin advantage at 14.68% versus 11.81%. This provides Maxis with superior operating cost buffers and enhanced pricing leverage to weather sectoral headwinds, establishing it as the more profit-efficient operator. To bring these pieces together, let's review the overall comparison high-level dashboard, which stacks the core metrics side by side. In terms of liquidity performance, CelcomDigi holds a slight edge at 0.57 compared to Maxis 0.48. For debt management, CelcomDigi wins on safety with 56.67% debt ratio against Maxis' higher exposure of over 70%. However, the operational engine tells the opposite story. When we pivot back to profitability, Maxis dwarfs CelcomDigi with an equity return on 25.39% versus 9.58%. This efficiency is further reinforced by the inventory turnover gap, where Maxis operates at lightning speed compared to CelcomDigi's slower, more cautious physical cycle. This side-by-side view perfectly illustrates the classic trade-off between risk protection and operational reward. In conclusion, both companies present distinct financial strengths that serve different investment profiles. CelcomDigi secures a much healthier balance sheet foundation via superior solvency protection, actively deleveraging to optimize its liquidity reserve and minimize default risk. Conversely, Maxis leverage its capital aggressively to yield massive profit ratios, anchored by its 25.39% of ROE and 14.68% net profit margin, while running industry-leading stock turn operations. Ultimately, choosing between the two depends entirely on risk appetite. CelcomDigi offers defensive balance sheet protection and stability, while Maxis provides aggressive operational returns and top-tier efficiency. Thank you.
Lastly, for the conclusion. Conclusion for the both company Maxis and CelcomDigi Berhad. The conclusion is industry focus, second analytical scope, and third strategic insight. So the strategic recommendation is to capture strong result going forward. Both companies must leverage customized operational updates based on their respective gaps, improving asset speed, balancing capital risk, and boosting bottom line margin will reshape long-term financial performance and investor return.